Okay, today we're going to talk about different time frames and conflicting time frames actually in this case and what you can do about it. The market isn't like it used to be where the weekly chart was bullish, the daily chart was bullish, the intraday chart was bullish. You know, then we really knew that we were supposed to be buying pullbacks. But when you have mixed parameters, what are you supposed to do? So I'm going to offer a potential solution, and we're going to talk about NVDA today. If you look at the daily chart of this one, you'll see that the overall pattern is still bearish. Okay, so pattern of lower lows and lower highs. You'll see that price is still below the 200 simple. Price is also below the 50 simple. And it's a bearish pattern unless we take out this prior swing high. And there's resistance here that comes in at the 158.54 area. Well, that's actually considered a sell setup. And we did see a little bit of a decline from that area. But typically, if you're seeing a symmetry sell setup within the direction of the trend, you're typically going to look for an extension to the downside as a potential target, okay, which means that this would be the potential target on the downside, right? But we don't know if it's going to get there. We do know that there's resistance here. We do know that there's at least been some short-term sell triggers against it. We just don't know where it's going to go, but we do know what the risk definition is. Now, that's one setup. But what if you look at this chart? It's the same stock, but it's on a different time frame. It's on a 30-minute time frame. And it's a bullish pattern of higher highs and higher lows. So this is not in agreement with what the daily chart shows you. And this shows you that as long as you have price hold somewhere above this 144 area, that you can look at buy triggers and anticipate another extension to the upside. So obviously these charts are fighting with each other. So what do you do about that? Well, you can either choose the time frame that you're going to trade. I mean, obviously, if you took a short against this area, maybe you're short up here, you know, you can ratchet a stop down or at least get to a break-even stop at this point. Or you can look at the buy side if it triggers an entry and define your risk underneath here. But there's one more alternative. You can wait and see if the 30-minute chart breaks down to be in agreement with the daily chart, because if that occurs, you're not going to have this tug of war going on. I mean, because that's what's going on with this market. You had a nice little rally and pop this morning, and now we're retesting the support. Do we know if it's going to hold here, or could it just roll over and die? We don't know. So basically what we do is, you know, we use these levels to base our risk against, depending on, you know, which side you're interested in looking at. But if you want to wait to see if the 30-minute chart comes into alignment with the daily resistance decision, you need to wait for a break of this support, and then you want to look at the next pullback. Okay, and then you'll have the higher time frame setup in sync with the lower time frame setup. At this point, you're just looking at a big old tug of war, and we don't know who's going to fall into the mud.